aside from Brexit, trade wars, and economic data, over the past few days, there seemed to be a weakness in the dollar that seems to suggest that investors believe that the Fed's commitment to purchase treasuries and bonds is seen as quantitative easing, QE. Well, my opinion is that that's not the case, right? So the Fed, what they're trying to do is simply just keep the short-term interest rates between the 1.5, 1.75%, right? The thing is that once those start jumping above the target level, right, then the Fed will step in to increase their balance sheet, okay? That doesn't necessarily mean this is QE. Because of this significant, I would say, consideration, right, the Fed injected more money into the repo operations on Monday, and that has been seen again as a weakness for the dollar, okay, because it's pretty much just adding more supply into a system. Now, demand weren't as great as some would have, let's say, feared, which is good, which means that the Fed is actually finishing the year in control of at least the repo markets. So we've seen the dollar Swiss franc moving lower, Aussie and also Kiwi moving higher. And this is what I want to close the year with today, okay? Because those, I believe, are going to be very, very big movers for in 2020. Swiss franc first. It's actually moving as we expected. We haven't looked at dollar CHF for quite a while now, so it's a very good opportunity to look at this now, because I've been looking at this earlier, and I've seen that we're actually reaching a very, very good support level at the moment, right? And that is also supporting our previous view. We've talked about this ending up here as wave, see up here. So down here we'll have primary 1, up here primary 2, and we're moving lower for primary 3, right? Now, of course, we are still in the minor degree, right? And it seems that we haven't even ended minor wave 3. And I'm going to explain why. Because we've got this wave 1 over here, wave 2, and wave 3 supposed to get at least to 1.618, right? Now, since this is extended down, okay, it's a very good possibility, actually, that since we have a very good support here as well, that these this level will attract more bears, right? And then bulls will push prices higher. This is potentially going to be wave 4, and then we're going to have wave 5, right? Now, it really depends on whether wave 3 moves lower, takes out this support level or not. If it doesn't, we will probably go into 3, 4, and 5, right? We're going to see that. If we get this level out, okay, over here, then it could mean that wave 3 was a bit shorter over here. That's wave 4, and then wave 5, okay? But then what we're going to ask ourselves is how long wave 5 is going to be, because what we'll have to do is measure, okay, wave 1 is over here, wave 3 would be over here, which 3 is still bigger than 1. So we could assume that wave 5 would be exactly the same as wave 1, right? So in that case, then we are looking at 96.40 or so for wave 5, and this could also be intermediate wave 1. And then we should be looking for prices to move a little bit higher to correct. And this correction, of course, would be the correction for wave 2, anywhere between 98.80 and 98.35 or so. It could be higher, it could be lower. Now, Aussie dollar, I wanted to go on this one because it's also reaching a very, very, very important level, okay? This is wave 1, okay? We had 2, then 3, then 4, and I'm expecting wave 5 to move down, right? Now, since we are actually at the bottom of wave 1, this means that if prices really break above that level, then this would invalidate this move to the downside as being impulsive, right? Which means, of course, that this pattern is not, I mean, this would invalidate at least the projection, or my projection, let's just say, that this is wave 4, okay? And could be potentially that this is wave 1, 2, 3, 4, and 5, and then down here, and then we have, you know, wave 1, 2, 3, 4, and 5. Instead of an ABC, that would be 1, 2, 3, 4, and 5, right? But I really believe that this 70 level as well, the 70 cents, is a very strong resistance. So we should at least see some correction in the short term, despite the likely scenario to come into play anyway. And then on the Kiwi quickly, the Kiwi has been moving exactly as we expected, okay? We talked about this even from down here. So we are now broken outside this ascending channel, right? And that normally indicates that there is going to be another sharp move to the upside, where this is going to most likely take out some stops and then start correcting. Now, if we take this Fibonacci extension over here, the 161 comes to 67.48, right? And if we take the 3 and 4 wave Fibonacci extension, the 61.81 comes to the same level, right? So this is a very good confluence level. Now, if the attempt is weak to take that level, then most likely going to see a move down here and then another move to the upside for wave 5 to take out this previous support, right? Then we're looking for wave 2, a correction, which is likely to come anywhere between the 50 and 61.8 retracement of this full move, and then we should be looking again for prices to start moving up. So this is all from my end. This is the last market insights for this year. I hope it's helpful, and I want to wish to all of you that are watching today to have a happy new year.